pay dividend. So of course, shareholders will not be very happy, right, if they're not paying dividend, right? So what can they do? They can convert their retained earnings into new shares, bonus shares, and give that to their shareholders. The shareholders, after they receive the bonus shares, okay, they can sell into the market. Okay, they can sell in the stock market and they bought it from that. So the question here is that will this kind of gain made by the shareholders be subject to income tax or not? So very simple. Then the first thing is always go back to our legislation. Always go back to our legislation. Is to look at whether this kind of gain right should be considered as income in nature or not. So this is how we answer the question. Is very straightforward. Every time you have problems with your client or your financial boss approach you, I got this money received, right? Am I supposed to pay tax or not, right? Class of income. This is the general classes of income that will be subject to tax in Malaysia. A, B, C, D, E, F. Okay, just look at whether we have got any one here saying that bonus issue will be subjected to tax over here in Malaysia. That's simple. If you ask me, the bonus share, right, looks a bit like dividend. It looks a bit like dividend, but dividend is a direct cash payment from the company that you have invested into. Okay, but bonus share is different. Bonus share in the sense that right, you receive additional shares, whether you make a gain or not, that depends on when exactly you dispose of the shares. If you dispose of the shares at the right time, you make a gain. Otherwise, you may end up with a loss. Let's say the share price drop, okay, lower than the drop a lot, and then until that you have to spend money in order like the transaction fees and things like that. Even the transaction fees that even the bonus shares gain rate is not enough to cover your transaction. Very unlikely. Okay, but I'm saying that the gain will fluctuate depending on the market value of the shares itself. So in that case, right? Look at this one here. Do we have any match over here? So it looks a bit like dividend. Now, by the way, dividend is still subject to tax under Section 4C. Okay, because a lot of you learn this particular system called single tier system, right? In your MTS saying that dividend is actually tax free now. The correct way to say it is actually dividend is still taxable. 4C, but exempted. Exemption under paragraph 12B, Schedule 6. So it's exempted. Taxable but exempted. Okay, so dividend is still here. So if you look at all this here, do you see any match here for the bonus gain from the disposal of shares? At the moment, it's not. Okay, it's not captured in Section 4 at the moment. Some of you say that maybe this one, gain or profits not falling under any of the foregoing paragraphs, that means line, etc., etc., etc. I can tell you that tax office can't use this one because they have tried in quite a number of cases. They have succeeded in maybe less than, I think, a handful of cases. They have succeeded using Section 4. Okay, because the spirit of tax is very simple. If you want to tax, let's say the government wants to tax the people, right? They will have to tell exactly what is subjected to tax clearly. That means Section 4A until 4E. If they want to use this right, they will have to over with the judges. The judges will say that it's not fair. You cannot let the prim and fancy of the tax officer just impose tax. Like that. So most of the time, if they use 4F, right, they will lose the case. Most of the time. So most of the time, we focus on this one. This field here. So for gain on disposal of shares at the moment, it's not captured here. So therefore, bonus, okay, the bonus issue shares, right? The gain made from that not subject to tax at the moment. Okay, at the moment, no. Okay, but having said that, the tax system may be changed after maybe this October. We have got a budget, right? Maybe this will be changed, like because we already have CGT last year, capital gains tax. But capital gains tax system, the moment that we have, right, only subject to those the gain, gain from disposal of shares of private limited companies, only. Okay, not public listed companies at the moment. So with that, right, the bonus issues issued by the public listed companies still not subject to any income tax at the moment. Okay, so always go back to this one. Very simple. So the argument here, now we look at the statute. Statute law as in the legislation. Legislation say nothing. Okay, so then the next thing what we do, look at the case law. And it has already been tested in quite a number of cases. You can send October 24. I give you some brief indicative points here. You can use that to expand your answers. So some indicative points here for you. talking about whether this should be regarded as income in nature or not. So if we tested in case law here, in fact, within Malaysia and outside Malaysia, so we have cases about that. Okay. This kind of bonus issues, right, should not be regarded as income in nature. Yes, we know that the tax, not the taxpayer, the shareholders, right, they receive some kind of benefits from this bonus shares here. But the problem here is that the company issued the bonus shares, right, has not suffered any loss. Okay, there's nothing changed in the accounts of the company. They didn't use any money, okay, to pay the shareholders. It's not a dividend in nature, therefore. And in fact, for the companies, right, it's quite straightforward. It's an accounting transaction, that's all. Because they just have to convert their retained earnings, right, into bonus shares. So how do they do that? Just a debit to the retained earnings account and then credit to the share capital account. And nothing moves. That's all. So with that, right, the company does not suffer anything. And because of that, okay, this particular bonus shares received by the shareholders will not be regarded as income in nature. Okay, it's considered as capital in nature. So eventually, if the shareholders dispose of the bonus shares, they make a gain is a capital gain, not income in nature. Not income in nature. So I would say that this is a bit awkward to me because I look at it, I would think that it's actually more towards income in nature. But too bad it has to be tested in court, right? Okay, based on this very important principle here. Nothing changed. No loss of what do you call it, resources, okay, in the accounts of the company. Just a conversion of retained earnings, therefore, should not be regarded as income in nature in the accounts of the shareholders. So based on that principle, no tax here on the bonus shares. But I'm not so sure whether you still remember what you have learned in MPS about share option schemes. You learn about share option schemes, right? Employee share option schemes in the accounts of the employees, would that be subject to tax or not? Yes or no? You have learned that right in MTS. ESOS, employee share option scheme. So if employees exercise, okay, the ESOS scheme and then make a profit from there, right, subject to tax or not? The answer is yes. But don't you feel that it's very similar to this one? It's also like a bonus shares, something like that, get issued by the company. And in fact, okay, let me show you another example. It is actually more similar to this one. Question 4 now. It's about the right issue. So the share option scheme is very similar to this one. Okay, look at this one here. This one is right issues for the shareholders. Have you learned about right issue in your finance subject? Yes or no? Right issue? No, right? Okay, never mind. Because you guys come from different core. Some say yes, some say no. Never mind. Now, right issue. What's the difference between right issue and bonus issue? Bonus is free of charge. Right issue means what? Okay, some of these companies they want to raise capital. They want to issue new shares. Okay, but the existing shareholders may not like it. You know why not? Because if new shares are being issued, okay, and eventually sold to new investors, right? What happened to the existing shareholders? Dilution of ownership, dilution of the control over the company, correct or not? So in order to make sure that the existing shareholders are happy, right? What they do is that they will offer the new shares to the existing shareholders first. See whether they want to buy or not. That is what I call rights issue. Okay, with the right as a shareholder, you get to purchase these new shares at discounted price. Has to be on discounted price. Means lower than the market value. Okay, why? Very simple. If you are shareholder, if you are offered with this particular option, the right issue, right? Okay, but the right price, that means the share price offered under this scheme here is higher than the market value. Do you think you will exercise the right? Why? It's cheaper to buy from the market, isn't it? Why do you want to exercise the right? So in order to improve the attractiveness of the right issue, the offer price must be lower than the market value. Like this one here. So in that case, right, if you look at here, if the shareholders exercise the rights, they will buy the shares at 230, and then if they manage to sell in the market, close the deal there 280, so they make a gain of 50 cents straight away. You get what I mean? This is the difference between rights and bonus issue. Bonus free of charge. Okay, but right issue here comes with a price. So in this case here, the 50 cents earned by the shareholders, right, my question to you would be, will it be subject to tax or not? Now, whether the shareholders can make the 50 cents or not depends on, again, the timing when they actually dispose of the shares. If they dispose of at the right timing, they make a gain, even more. But if wrong timing, let's say the price dropped below 230, right, and too bad. Okay, so So the question here would it be considered as income in nature, not the 50 cents immediate gain between the difference in the price? Be subjected to income tax or not? So again, look at section 4. Is there any mention there about for this kind of gain? Nothing, unless you are in the business of share trading. Then it becomes a foreign income. If not, right, with the normal investors, right, no income tax imposed on this yet. In the future, I don't know, but at the moment, no. Okay, so again, based on the same argument here, you can step here. The same argument, almost the same like bonus issue, right, is actually considered as capital in nature. So for this one here, it's like, the shareholders, the existing shareholders, they invest more money. They buy the shares, it's a capital investment, and eventually they make a gain from exercising the rights, right? So that would be considered as capital gain, okay, in nature. For time being, it's not subject to tax at the moment. All right. So this is exactly what has been sort of like tested in the court of law, because there's no mention in section 4 to say that this is actually a class of income. Okay. But in the future, there might be a change. As I said, after CGT is being implemented, the full version, at the moment, it's only a half-cooked version of CGT. Only gains are coming from, disposing of shares coming from Sindran private limited companies only. Okay, will be taxed, which I think is a bit redundant if you ask me, because most of the transactions actually coming from the public listed companies, coming from the stock market, not from the private, disposal of shares in Sindran. So obviously we have a loophole there, because as I said, I've got a lot of friends, some of them, they actually, they don't really pay income tax, but they make a lot of money from stock trading. And at the moment, it's not subject to tax, right? So they're not paying income tax. You'll be surprised, we've got about 30 over million people in Malaysia. Guess how many people pay tax? Any idea? For 34 million population Malaysians, yeah. How many pay tax? 10 million? Oh, you're so optimistic. We've got 10 million, our country will be so loaded and so well developed. Any idea? Yes? 34 million, of course, we have kids below 18, and then we have old folks, retirees as well, right? So in the middle, we probably about, have about maybe 20 million, something like that in the middle. So guess how many pay income tax out of the 34 million, 34, 35 million population? Yes. According to a survey done by IRB, before COVID, we have got about 7%, about 2 million people. After COVID, even worse. After COVID, now it's about 4 to 5%. If you look at the internet, information, it's about 1 over million people to 2 million people paying income tax out of 34 million population. Scary, right? So that's a problem. So that's why we have got a big loophole in our tax system that we have to plug. A lot of people, they're earning money, but they don't pay income tax. So in this case here, another one what I highlight to you is the ESOP, back to ESOPs. Don't you feel that the ESOP scheme is very similar to this one? Employee share option scheme. Employees given options to buy shares at a discounted price, and then they make a gain because of the difference between the market value and the exercise price, right? They need to pay tax. But how come they want tax, this one not tax? How come ESOP scheme is tax? Similar nature, right? Yes. Yet based on that, right, tax office actually changed the law. Strictly speaking, logic-wise, okay, in terms of principle-wise, they are the same. But tax office have make it say they have changed section 13 and also section 25. Okay, to make that kind of gain from ESOP scheme, right, to be taxable as section 4B employment income. Small b income, okay? Section 4 small b income, employment income is similar to perquisite. So that means, right, okay, the tax office has changed how to make it like, that kind of gain from ESOPs, right, will be considered as part of your employment income, like your salary, like your bonus that you earn. even though in principle it looks the same. Of course, the people are the different now. One will be employees, the other one is actually shareholders. Okay, so I say it's actually unfair, right? Okay, so these are the two awkward, as I see that, three awkward issues that we have in Malaysia. But never mind, okay, we just follow the law at the moment. I'm waiting for cases to challenge that. Another one more here is actually, okay, another one more issue here is actually something to do with interest income. Let's look at the law. Yeah, okay, my slide. Now, the issue here is about interest as business income or as in passive income. So the benchmark case is Penn Century Adv Tax. Okay, if you have listened to my pre-recorded session, I will explain to you exactly what happened in this case here. Okay, it is something to do with either interest should be taxed at 4A business income or 4C passive interest income. Okay, so do you know that interest can be taxed at 4A or 4C? Like rental income can be 4A rental or 4D rental. So what's the difference between 4A and 4 the respective classes of income? So if you are the taxpayer, do you want, let's say, interest income? Do you want it to be taxed for rental income? Do you want it to be taxed at 4A or for other income? 4A. Why? There must be a reason, right? Okay, because 4A is actually much more flexible, put it this way. If you have a loss coming from business loss, right? What do you do with the losses? Okay, use that against your aggregate income first. So remember, use that against your aggregate income to reduce your chargeable income, or if you have not enough aggregate income to utilize your tax losses, right? You can carry forward next year to stand up against your next year business statutory income. And in terms of deduction, you get more, especially Section 34. Section 34 deduction is available only to business income. What is Section 34 deduction? Give you example. Specific provision of bad debts. So remember, not you can claim a deduction, but only against your business income under Section 34. Can you claim CA or not? Capital allowances? If it's business income, yes. But if you earn rental income, for example, right, or the rental income, you claim CA? Cannot. Okay, so obviously taxpayer will want, okay, whatever income also tax under business, if possible. Okay, so and in fact, from principal point of view, I always try to achieve a differentiate between 4A, 4B, and also CDE, and all the way to F, right, as two different clusters or two different categories of income. One is what they call active income, the other one is called passive income. Active as in business income, you have to have your business, you have to work, okay, on your business. Therefore, your 4A income should be active income. 4B employment also active. You have to work in order to earn your salary, right? And then, now, what about interest income as in deposit? I put my money into fixed deposit account. I earn interest. So is that a passive income or active income? Passive, right? You just put your money into your fixed deposit, almost like risk-free rate as well. Then you get your interest income, so it's passive. But our law does not differentiate between active and passive income. Okay, it didn't say, it didn't classify as in, section 2 to tell us that we have passive income or active income. So everything is income, just different classes of income, that's all. So back to this one here, for Penn Century and Oil, right, they earn interest income. So what do they do? Now, this company is producer of cooking oil, okay, edible oil. So the raw material, major raw material will be crude palm oil. Crude palm oil is actually a commodity of which the price will fluctuate. Sometimes can be quite violent, depending on weather. Sometimes climate change and the problem, isn't it? So because of that, maybe they will have to buy their raw material becomes more expensive. When there's a fire broke up, in let's say Indonesia, or maybe some weather issue in Indonesia, and therefore the supply of crude palm oil will drop, and therefore the price will go up, correct or not? Or sometimes, okay, maybe the planter, they have a good harvest, okay, good weather, and then they have harvested a lot. They managed to get a lot more. They get the supply of crude palm oil, right? Therefore, the price will drop, okay, because the demand doesn't change. Put it this way. So in that case, right, this commodity price will actually fluctuate in tandem with all these external factors. And therefore, now if you are the financial controller of this company, right, what do you think you would do? You know very well that your company is dealing with raw material that fluctuates in prices, okay, and this due to the external factors, right? So what do you think you would do as a financial controller of this company? That means you're trying to hedging, right? You need to have the hedging strategy. That's what you learn in finance, hedging, right? So when you're dealing with something keep on fluctuating, a lot of uncertainties, a lot of business risks there, right? What you do is you try to hedging strategy. Have you learned this in your finance subject? I did it, just learned. Hedging strategy. So in this case, yeah, the financial controller, the finance department of this particular company came up with this very simple strategy. When they have money, extra cash, right, they put it into short-term investment, roll over a few days or maybe a few months or maybe a few weeks, that's all. So they will make some money, some additional income, okay, interest income from there. And all this money earned will then be used to finance the operation. So in the event if the crude oil price become very expensive, right, they have more cash, okay, to buy to cover the cost of the raw material. Okay, it's a hedging strategy. And this particular strategy was actually advised by financial planners, not at the whim and fancy of the company. Okay, it's actually based on advice from financial planner, reports, and also financial analysis as well. So therefore, now in this case here, okay, the company wanted their interest income to be treated as Form A business income because of the risk involved, isn't it? And also the utilization of the funds and the returns for the business purposes, hedging strategy. Tax office say no, must be a 4C income. So this was the case was before enactment of Section 4 Capital B. Okay. So what happened then? The company won the case. The company won the case. It was very obvious. All the activities, all the things show that right, this interest will carry the characteristics of business in nature. The characteristics of business in nature, not passive interest income per se. So therefore, the court actually granted in favor of the taxpayer. Okay, and after that, what happened? Tax office keep on losing a few more cases, in fact many more. Until one fine day, okay, that's it, enough already. We went to the parliament, changed the law. They put in Section 4 Capital B, which point to Section 24(5) to tell us that only interest income earned by financial institution or licensed money lender will be captured as 4A income. So the loan shark also no problem, it's 4A income. Okay? Financial institution and the banks, insurance companies, right, no problem. Interest will be 4A business income. But we do have a lot of other taxpayers, right? They are not in the business of banking financial institutions, not licensed money lender, but they earn interest. So the question here is that fair for their interest income to be treated as 4C income or not? I show this example. This is a very good example, okay, which is something to do with this one, furniture house, furniture shops here. So we've got this customer bought some furniture here from Broward Mewa, a furniture company. The price of this furniture is 10,000, but the customer opted for easy payment scheme, 24 months, pays 475 ringgit a month. Are you aware that a lot of furniture companies, right, they're offering easy payment scheme, including IKEA as well, So in this case, yeah, the company actually offers 24 months easy payment scheme. Okay, so now question is, why do you think all these furniture shops they're willing to offer easy payment scheme? What's the reason for they to do that? What's the reason why they want to do that? Interest. Why do you think that the furniture shops are actually willing to actually offer easy payment scheme? Of course, they will earn more in terms of the interest, right? But first of all, why do they want to do that? It's actually to encourage their customers to buy more. Yeah, to boost their sales, right? Business strategy, very simple. I have only 10,000 ringgit to buy this sofa this month. If I want to buy the dining table, right, I have to wait for another 2 more months later when I save enough money. So if I'm allowed to have an easy payment scheme, I buy happily, then I pay on installment. So with that, it will increase the sales of the company, the furniture, okay, shops. And at the same time, of course, the furniture shops will actually charge more if they offer you easy payment scheme, correct or not? Okay, it's actually now if you look at this one here, the price of the sofa is 10,000, and how much, okay, Jasmine, the customer, end up paying if she opted for the easy payment scheme. 11,400, right? So why there's a difference between 10,000 and 11,400? So what is that? Yes, the interest, right? The 1,400 is actually the interest. Is actually the interest. So my question to you would be, right, this interest payment earned by the furniture shops, business income or passive interest income? So if you are the taxpayer, which one do you want? Use common sense. Business income. Common sense will tell us business income. Why? Do you have to take the risk of offering this easy payment scheme or not? Easy declaration. Yes. Yes. What happens if the customer disappear 2 months later? Okay. So started off with, okay, let's say this furniture shops are located in Kelantan. So the customer also Kelantan. 2 months later, the fellow moved to Johor or moved to Sabah Sarawak, okay, and stop paying the installment. So how are you going to get the money? Difficult, isn't it? So you are taking the risk if you are the shop, okay, if you are the furniture company, you are taking the risk. So when you're taking the risk, how can it be considered as a passive income for the interest rate? So it's actually active income for us. Active is for the risk involved. Logic will tell us that it's actually business income. Common sense is actually business income. But too bad, now it has to be regarded as what do you call passive income. Okay, funny, isn't it? So anyone challenge this? No. You know why not? Because people already figured out two ways, at least two ways to outsmart this section 4 capital B. Okay, let me share with you. Number one, IKEA. I said IKEA is offering easy payment scheme, right? But is IKEA the one offering the easy payment scheme? Are they directly involved in the provision of this easy payment scheme? If you go to IKEA, you probably notice that the signboard there telling you, right, if you buy, you get the furniture. If you're using your credit card, let's say from CIMB, because CIMB, if I'm not mistaken, they offer some membership, with IKEA and things like that, right? So if you use a CIMB credit card, what can you do? Eventually, you can convert your purchases into easy payment scheme with CIMB. So CIMB will be the one collecting the installment from you and also charge you interest. CIMB is a bank, right? So section 4A of what's income? For income. And IKEA happily collected the money from CIMB first, the full amount. That's it. They don't want to earn the interest rate this way because they do not want to get into trouble with all the interest payment, right? And they do not want to set up another department to deal with the customers if they didn't pay on time, all this. They don't want to take all this risk. All they have to do is to work with the financial institutions. That's one way to resolve that. Okay. So easy payment seems still be what do you call it, awarded, okay, or provided by the furniture shops, but they work with a partner, okay, financial institution. That's exactly what happened in IKEA now. Another way to do that would be any example. Try to observe what happened in your daily routines. Okay, then you know a lot of all these things are actually business strategy. Huh? But buy online, if there's actually an easy payment scheme offered by the seller, you still start with this one. Okay. Anything else? Any one more strategy. Aeon supermarket. You go to Aeon, you buy your groceries. If you use Aeon credit, do you notice that you have got another company called Aeon Credit? Aeon got Aeon supermarket and Aeon Credit, they are the same group. So Aeon supermarket sell you the goods. Then if you use the Aeon credit card to pay for your bills, right? Again, literally you can call up Aeon Credit to ask for installment payment. Convert that into easy payment scheme. So which company will charge you the interest? Aeon Credit for a income, not Aeon supermarket. So another way to do it is set up another subsidiary, get a license to lend money, like Aeon Credit, they're licensed money lender. They're not a bank, they cannot take deposit this way, but they're licensed money lender, so they can actually issue a credit card. So they will be the one charging. So in the end of the day, they will be the one earning the interest income as in a licensed money lender, right? Financial institution, right? For a business income. Aeon supermarket collected the money from Aeon Credit first. Then eventually Aeon Credit will collect the money from the customers. Two ways to outsmart that. Anyone stay in Puchong? Puchong, a lot of properties then developed by IOI, isn't it? IOI as in property developer. Now I'm not so sure whether you look at the signboard, they've got this called IOI Finance. IOI Finance Corporation is actually a company, a subsidiary of IOI. So what they do, IOI, construction, build all the properties. I want to buy, I have no money. Okay, I can borrow from Maybank. If Maybank reject my loan, no problem. I go to IOI finance now. So IOI finance will be one, okay, lending me the money so that I can buy IOI properties and eventually I have to pay back to IOI credit. Installment, they earn the interest. So these are the ways business entities have used right to outsmart this section. Just not capital B. Okay, that's why at the moment nobody complain. Okay, nobody is trying to challenge this. So this is exactly what happened. As a tax consultant, right, you need to be creative. Have you done anything illegal or not? You have credit and also IY finance, nothing. Okay, it's fine. That's all. Okay, so next, this is the tax treatment. So the tax treatment here, I want you to tell me exactly whether the tax treatments there are correct or not. Snap photo first, and then we'll discuss whether this one is actually correct or not. Okay, if you look at YA 2015, the price of the original price of the furniture 10,000, recognized as gross income in YA 2015. And then the interest we have calculated is 1,400 just now, right? Okay, the 1,400 will be a portion divided into 3-year assessments based on the number of installments in that particular year. So you have 1A 2015, 8 installment, 16, 12, and then 17 here, 4 installments. So the interest will be recognized based on the amount of installments paid by the customer in the accounts of the furniture company. How come? The price, the original price of the furniture been captured in YA 2015, but interest apportioned in 3 years, within 3 years. Are these tax treatments correct or not? Like for example, this one here. Okay, since the purchase is made using easy payment scheme, right? Are we supposed to also apportion this 10,000 into 3 different year assessments? What do you think? There are 2 different treatments over here. So this one, I just take this one as for example. Are we supposed to just split this into 3 year assessments since it's an easy payment scheme? Why not? Some of you say yes, some of you say no. Split or lump sum? Lump sum. Why? There must be reason. You cannot simply whack. Sorry? The law says so. Which part of the law says so? Apply a bit of common sense and things that you learn in accounting. Exactly. For business income, right? Okay, the income is tax based on accrual basis or receipt basis. Accrual basis. That's what you have done in accounting, isn't it? Okay, we have to recognize the revenue or the income once we have fulfilled our responsibility. The seller has fulfilled the responsibility. So in this case, yeah, very simple. Once the furniture has been delivered to Jasmine, the customer, Jasmine sign off, acknowledge receipt straight away. Accrual basis of accounting will recognize the 10,000 first. That's the original price of the furniture. So same thing in tax, but we don't use the term called accrual. We use these different terms called when a debt has arisen. That means when a debt is created. So the moment the furniture company deliver the goods, the furniture to the customer acknowledge receipt, a debt has already been created. They get owed to the company by the customer. So therefore, at that point in time, income will have to be recognized. So the 10,000 must be recognized. That's exactly what happened. So accrual basis. Then what about the interest income? What portion? It's on receipt basis. In income tax, right? Income tax says that interest payment must be based on receipt basis. That's why it should be based on number of installments received in the year. So that means the tax treatments here are okay. Move on. Are you guys following? Yeah. But these are all 4C income, like it or not. So the impact would be, okay, next one I will show the impact. The next questions that we have. Yeah. We move on. Next question. Okay, this question here involves a property developer. This one is another long bigger story, of which we have some problems as well. I'm also waiting for the case to happen. is again to do with the interest income. So here we have got this property developer specializing in residential properties, housing developer. So they earn income from selling the properties, housing development from business there, and at the same time they also earn interest from a housing developer account. What is a housing developer account? Why is there a housing developer account there that generates interest income? Okay. Have you heard of this? Okay, I'm quite sure you heard of. Sometimes you read the newspaper, right? You probably notice that there are some cases of abandoned projects. Abandoned projects, as in, now the project, suppose this is the property development project should last for 3 years. Then the seller, I mean the property developer, right? Okay, they collected money from the buyers, but they didn't complete the project and they run away. Okay, the latest one, the latest case, a major one, was actually Evergrande in China. Have you heard of this case? Not Evergrande. Yeah, they have got billions and billions of dollars of projects they have not been able to complete, but they have already started collecting money from the buyers. And in fact, PwC, the auditor of this company, right, will find in China 400 over million renminbi because they sign off the account happily, fair and true view. Every year also fair and true view. Fair representation, no problem, sign off. So now problems already. So that means, right, the auditors didn't check properly whether the company has done the job. So then what happened? PwC is now having a big problem in China. They started closing down some of their branches in China. They're not doing well. Why? A lot of clients, right, they pull out. They don't want to appoint PwC anymore because they say PwC didn't do their work properly. But put it this way, all the big four comes with scandals. If you ask me, still remember one MTV or not? Which companies, which firm signed off the audit accounts? KPMG. KPMG signed off. Yeah, happily, one MTV, no problem, true and fair view. Yeah. So if you ask me, I don't trust any of this one. Too bad because it's a process that we have to go through. Now, this one here, why do we need housing developer account here? Very simple. It's to deal with all these abandoned projects. Back in the 70s and 80s, if I remember correctly, time frame, what happened was we have a lot of property developers in Malaysia selling housing projects, residential properties. So to become let's say you have a piece of land, and then you want to become a housing developer, no problem. You can register a company to do so. And after that, what do? You chop down all the trees on the land, and then you put up a signboard, and you put up a small little sales office there, or showroom office over there, right? And then you start selling. Why? Because in Malaysia, we have adopted this particular model called sell then build. It's very different from European countries. They have the model of build then sell. That means in some of these very developed European countries, right, you have to build the properties first, then only you can sell. That means when the customer or the buyers are buying, they will look at, okay, this is the finished product, the finished property there for them to buy before they decide. But in Malaysia, we do the sell then build model. Means, right, if you have a piece of land, you want to become a housing developer, you just chop down, all the trees nicely, and then you put up a signboard, you put up a small office there, then you can start selling the properties. So what exactly are you selling at that point? Dream. You're selling a dream to your customer. You tell them, give me your money in 3 years' time, you deliver your dream. Your dream house will be there 3 years later or 5 years later. But can you trust them or not? Now, previously, in the 70s and 80s, a lot of people are doing that. So what happened? They started collecting money from the buyers. 2 years later, disappeared. And then the land still waited. Nothing happened there. Because the buyers, you don't expect the buyers to go and check on the property every day, right? So that's why we have a lot of problems like that. So the government came up with this particular idea called housing developer account, meaning to say that you can still sell dream, no problem, as a housing developer. But the money collected from the buyers will have to be deposited into the HDA account, housing development account, of which the housing developer cannot touch the money until they provide evidence they have started the work. Let's say they have done 30% of the construction, right? You need to get external party to come in to certify, quantity surveyor, for example. This quantity surveyor, the valuer, will come in and say that, the project is about 30% done. So with the certification, with relevant documents, then only the property developer, the housing developer, can apply to relevant authorities to unfreeze the money. That means to take the money from the accounts, maybe up to 30%. How much work done, you claim how much money, that's all. This is one way to protect the buyers. to mitigate the risk of incomplete projects or abandoned projects. So now you understand the whole idea, okay, why we have HDA here. Now, question, this HDA account, right, is an account maintained with financial institutions like main banks and like normal saving accounts that all the buyers will put their money into that account. And of course, this account is income generating. They produce interest income. So question is this interest earned from the HDA account to be regarded as 4A or 4C income? It's a business requirement, isn't it? It's a licensing requirement, isn't it? You have HDA, right? So in that case, the interest earned from the account should be 4A or 4C. It's a 4A business income. In fact, tax office actually acknowledged that before 2013. They said, oh, it's actually business income, no problem. In one of the public rulings, they say 4A income. And then in 2013, after the case, and then we changed the law, right? So what happened then? Even interest from HDA will have to be regarded as 4C income. So that's exactly what happened now. So let's look at the tax treatment. Okay, why 4A is actually better than 4C. Now I'll show you one. Okay. Okay, so in fact, in 2012, before the enforcement of Section 4 Capital B, as you can see, the interest income here is actually 4A income. So the company has got 4A business income coming from the sale of the property, let's say 10,000 there. And then for the interest income under 4A, right, is adjusted loss. That's why it's nil here. Now be very mindful. I noticed that some of the seniors, I don't know why they put a negative figure over here, 20,000. Do you put negative 20,000 here when you adjusted loss? No, you put nil. Nil. Okay, as the name indicated, this particular column here is supposed to be for adjusted income. I mean, it must be positive. If it's the negative figure, a loss, right, you put nil here. Don't put negative figure here because all your calculations eventually will be affected. Okay, be very mindful. So this is a common mistake made by your seniors. All this is I don't know why. Okay, you pass your MTS, you should do this nil here. Okay, then what happened to the adjusted loss from business? As you can see. Okay, the company has got aggregate income here 10,000. Use that against the aggregate income first. Whatever balance, 20 minus 10 here, balance, carry forward next year. Bring forward to YA 2013. Okay, bring over to YA 2013. Okay, that's exactly what happened. Now, in YA 2013, tax treatment has changed. Why? Because of the enforcement of Section 4 Capital B. For the tax computation, I can only show you the answer, but do by trying to practice. Okay, if possible, go to the internet, look for additional questions to practice. Or you can go to the library, look for some of this, what you call, maybe ACCA, what manual and things like that, right, to do some additional questions on that. And also I think the text manual that I ask you to buy if you're interested, right, comes with some questions inside there as well. Okay, practice. By the way, the link will be disabled by next week. It's a discounted price, so it's up to you. I'm not promoting that, but if you want, you can buy that because I'm not using Shopify textbook for this semester. They have not updated the textbook for at least 2 years already, and they're very expensive, 180. Even the photocopy version of the textbook is so much Shopee. Now these people are very crazy. You know what? Shopify textbook very expensive, 280, right? So start 108 is actually pretty good. For this case here, law has already changed. So through the tax computation, we notice that we have got this statutory income from business one. Okay, that means the sale of the properties here, 15,000. Now this one is the loss carry forward from last year. We use that against statutory income from business. Okay, set up. Okay. Now then we have got the second source here would be the interest of 4C income here. We put it here 5,000. It's a 4C income now. Now if this is a negative figure again, can we have a negative figure? Can. Because maybe the interest collected in the HDA rate not enough to cover the bank charges, for example. Then it will end up with a negative figure over here. If this is a negative figure, 5,000, so do you have any figure over here? Nil. Nothing. So the negative 5,000 tax loss coming from 4C, right? What can you do with that? Can you claim against your aggregate income? Cannot. Can you carry forward? Also cannot. It becomes a permanent loss. It becomes a permanent loss. So that's a problem of this. If it's a 4C income, that's a problem. Okay? So, but at the moment, nobody make any noise about this now. So far. So I assume that it's okay. Yeah, waiting for a case to happen. If a case happens, then law may be changed in the future. But for time being, as I say, a lot of these operators, right, they already have this strategy, at least two strategies now to overcome 4B. Either they work with the financial institutions to provide the easy payment scheme. The other thing is, big companies can set up a second company. Okay, they can set up a subsidiary to get the license to become a licensed money lender. To get a license to become licensed money lender is not that difficult in Malaysia yet. If you want to become a bank, very difficult. Why? Because if you want to get a bank license, right, it means license are given to you to collect deposit. Okay, it's different from a licensed money lender. Licensed money lender means you have the money, you can lend money. Okay, so you have borrowers. But if you want to become a bank, right, very difficult. Why? Because you take deposits from the depositors. The one very difficult. Okay, but the other one, licensed money lender, you want to become a loan shark, you want to legalize your company or your business, right? Loan shark business, no problem. Go get a license, that's all. So when you collect the debts, make sure you don't use force. That's all. You try to be nice. Okay. So this is what I'm going to cover for this week. Next week we'll start to have a bit slightly go a bit faster.